My accountant handles my tax strategy.
0 out of 10. Your tax professional is not the same thing as a tax strategist. You need to make sure that you have someone, yes, keeping you compliant with taxes, but most importantly, being proactive about your business numbers so that you have a tax plan to not give all of your hard-earned money away to the IRS.
S-Corp saves everyone money.
That's a 4 out of 10. An S-Corp is a great entity structure for a lot of businesses, but it is not the right answer for everyone. So not everyone needs to be an S-Corp. And a lot of times tax professionals will just default to make you an S-Corp when ultimately you'll end up paying more taxes.
Write-offs equals tax savings.
4 out of 10. Spending $1 to save 30 cents in tax doesn't always math for you as a business owner. So it is so important to be intentional of how you're spending money. Going at the end of the year and buying a vehicle just to get a write-off when you don't need a vehicle just can drain your cash and doesn't save you that much in taxes.
Quarterlies aren't a big deal.
That's a 4 out of 10. The IRS would prefer you to pay quarterly estimated taxes. However, they are not required. And if you don't, there is a small penalty and fee. However, as a business owner, if you hang on to that money, I would imagine you could have a bigger impact with it, and the penalties and fees will be minimal compared to the impact you can have with that cash. And also, if you have an aggressive tax strategy, you might not even owe taxes at the end of the year, and then you're stuck fighting the IRS to get your quarterly estimated taxes back.
Tax planning is only for big businesses.
That's a 0 out of 10. Everybody needs tax strategy. Even if you're a high net worth W-2, there's still things that you can do to help counteract all of those payroll taxes that you're paying. So whether you're doing $500,000 a year or $5 million a year, as a business owner, you need to be proactive with your tax strategy. Otherwise, more money than you want is going to go to the IRS.
I'll deal with taxes at year end.
That's a 1 out of 10. December 30th is too late for tax strategy. At that point, you're just scrambling and you're going and buying things that you don't need, and you're depleting cash that you probably need for tax strategies that are actually going to build you wealth instead of costing you money. So don't wait till the 9th hour.
Profit is the enemy of taxes.
That's a 2 out of 10. Profit is the power that helps you not have to pay as much in taxes. The more profit you have, the more opportunity you have to pay less in taxes. Our highest net worth individuals pay the least amount of tax because they have high profit and they have cash available to take advantage of multiple strategies that if they didn't have a high profit and they didn't have cash, they would just still have a tax bill and have no other options.